because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets.
The U.S. government is still cracking down on Bitcoin companies, which poses possible dangers for the business. Regulatory agencies like the U.S. Securities and Exchange Commission are showing no signs of backing down from an exercise that threatens the growth and continued development of the crypto space in the U.S. Earlier this month, Uniswap Labs, the creator of Ethereum's largest decentralized trading platform, revealed that it received a Wells notice from the agency suggesting an enforcement notice is imminent, like Coinbase, Kraken, and other crypto-related firms that have been served similar notices in the past months. The SEC warned that Uniswap faces potential enforcement action for operating as an unregistered exchange and broker-dealer. In a blog announcing the Wells notice, the DeFi platform said, taking into account the SEC's ongoing lawsuits against Coinbase and others, as well as their complete unwillingness to provide clarity or a path to registration to those operating lawfully within the US, we can only conclude that this is the latest political effort to target even the best actors. After reading the notice, Hayden Adams, founder of Uniswap Labs, wrote on X, "I'm not surprised, just annoyed, disappointed, and ready to fight. This fight will take years and may go all the way to the Supreme Court. Uniswap will not be the only crypto firm fighting the SEC's onslaught if it does come to that." Recent news says that the Ethereum developer Consensus has sued the SEC over the regulator's illegal takeover of Ethereum. In the complaint filed against the SEC and its commissioners on Thursday, Consensus said it received a Wells notice from the SEC on April 10th, which said that the regulator planned to take action against the Ethereum developer for breaking securities laws through its MetaMask. A friend thinks that all of this is just a smokescreen to keep investors' money in the system, even if it means that a lot of developers will leave the US. Here are some clips from the talk. Please like and share this video. Please follow the channel for more videos and enjoy the movie.
So, as I've spoken here before, this is all driven by the liquidity cycle. It's actually a macro cycle driven by the refinancing of government debts, because everybody reset interest rates to zero in 2008. They set their government debts all at 3 to 5 years, gives us a 4-year cycle. That was the exact point, the launch of Bitcoin. It's also the US presidential election cycle. It's all the same thing. And election cycles, they give out candy to the kids, which is their way of stimulating. So it's all part of this stimulus cycle and debt refi cycle. So I don't think that changes, because the debt issue is still too big. Okay, so what is the nuance of the cycle? Normally, we've only got 3 data points, but the crypto spring, which is the first year after the bear market, this has been a strong one. Bitcoin was up 150% or whatever. So that's pretty strong because we brought an extra source of demand in, as you allude to with the ETF. But that actually came later, but it was front running by hedge funds and participants.
Us, yeah.
Yeah,
Is that
transitioning to crypto summer, which is
okay.
I'll come into in a sec.
Okay.
So crypto spring transitions to crypto summer, and that's usually happens after the halving. And after the halving, you see something that I know everybody's getting shit for right now, is if you go back to 2020, after the halving, what happened? ETH Bitcoin bottomed.
Right.
And then it slowly based, and then it started outperforming, right? That's when the market takes on risk and goes out the risk curve. And that's when you start to see Bitcoin dominance coming down, all of that kind of stuff. That's what the summer is. It's also altcoin season. It's when we hit what I commonly refer to as the banana zone, when everything goes bananas, right? The bit of crypto magic. Now, this banana zone is interesting to me because we've got this new source of demand. This is the most reflexive market ever, because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets. But basically, the world is underweight this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. So I think we can see a second wave of panic into the Bitcoin ETF from people. I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. And he's like, Raoul, when do you think Bitcoin hits 100,000? I said, probably the summer, with the kind of demand and the ETF. It kind of feels like sometime in the summer. He's like, so much wealth is getting made in crypto. It's making the billionaire class nervous. I said, what are you talking about?
What?
And this was a lovely insight. He's like, okay, there's two groups here who all they care about, they're so rich, all they care about is where they fit on the rich table. Right? They can't be the Silicon Valley guys, but there's this whole group that compete with each other for how wealthy they are. It's not
like
even
the
about
scoreboard?
returns anymore.
Right.
It's like a scoreboard.
When you're in the
of
top
status.
10,000, you can kind of count your way to the top and you really know exactly where you are.
And so he said, they're all going to panic that they're going to lose relevancy. So they're going to panic in. They're going to panic into Bitcoin, the Bill Ackmans of this world and, all of these people. So I thought that was funny. But he also said the other group is the billionaire property developers. He goes, these guys are losing relevancy fast because of commercial real estate. And these guys have been lording it around, Palm Beach and everything else as the kings of the hill. And they're worried about their relevancy because, once you're worth $5 billion, it's not a wealth game anymore. It's like, am I richer than my neighbor? That's all they care about. And so he's like, I think that they'll probably get involved as well. And I think that mindset is pretty true everywhere, right? People see Bitcoin going up and then you hear that your mates, you're playing golf or having a drink and he made money in it. And then you think, I've got to make money in it. And this is the reflexive loop. So that's what crypto summer is all about. It's the FOMO, the madness, the insanity that crypto becomes. But it also drives adoption, drives money into the VC again. It flushes money through the system, allows people to build new product, which is the next cycle's gains and all of this stuff. So that's great. And then we go into fall. And this is where the complications lie. Crypto fall, which we historically 2025, they've generally finished at the end of the year. We don't really ever know exactly. I think this cycle's maybe started a bit earlier. I don't know. And falls can be the most tricky part. This summer is the easy bit. You just shut up and do nothing. And number go up. Fall is tricky. So if you go back to 2013, we had a 50% sell-off. People thought it was done because it had already gone up, 20x or something stupid. It then corrected 50%. Everyone thought it was over. And then it moon rocketed in just a way you can't comprehend. Then you get to 2017. Same. 2017, everyone kind of thought it was over early summer. And then it did, 10x from there. It was bananas, right? That is really hard to deal with because 2021 was a stunted cycle. We never got the accelerated final leg. We had the huge correction. It went up, poked its nose back up in the highs, collapsed. Everyone's got PTSD from that. The real money was made in those previous two bull markets in terms of percentage returns. Everyone now assumes it can only go up 3x from the all-time high. There is actually no evidence of that. Maybe something was weird in the last cycle because the other ones did a lot past the all-time highs. So how I think of it is a distribution curve. Middle is it kind of does what it's supposed to do until sometime mid H2 2025, it tops out. Okay. That would be normal. That would be Bitcoin as a price target of, call it 200,000, something like that. 3x the all-time high kind of thing. I would give a 60% probability. I think there's a 20% probability that people who are calling this a left translated cycle, i.e. we've brought forward demand because of the ETF, it dries up, we're overperforming for this stage in the cycle. I think people saying that tend to be one cycle people because they only saw the last cycle because others have outperformed earlier on. So anyway, okay, There's a 20% chance of that. Then there's a 20% chance that this turns into a full-blown bubble cycle, a 2013, 2017, because of this new dynamics. You throw in an ETH ETF as well. You throw in, the $65 billion of VC that went into the last cycle. Somebody comes up with some killer applications. Before you know it, there's 200 million people playing a game. There's, stuff like this going on. Okay, that could create something crazier. And I'm continually assessing these probabilities in my head. And because there's so many people who I've noted have PTSD from the last cycle, the stunted top, it's less translated, they're going to take it away from us, starts to move my probabilities that you get a correction and then a spike. You can't predict that because everyone's going to hate you if you're wrong. Like I got hated at the top last time by thinking we were going to have that. Right. So it's also very difficult to manage. So it's complex, I would say, but we don't have to care this year, which is lovely.
As regulators and lawmakers like Senator Elizabeth Warren keep our eyes on their non-crypto trade, other areas and countries are looking for ways to get more involved with and open to the industry. Some countries are even mining Bitcoin with extra energy to make sure that future generations have a place in the new digital era. But regulators and some politicians are determined to do the opposite. They see the freedom of the cryptocurrency industry as a direct threat to the powers that be and their plans to enforce a CBDC. As Pal said in his interview also, do you agree with Raoul Pal's assessment of the regulatory environment in the U.S., especially when it comes to the cryptocurrency industry? Please share your thoughts and views in the section below. If you like this video, please become a subscriber and turn on post alerts to get more videos just like this one. Keep an eye on